Minister of Mineral Resources, Mantashe, has lashed out at Goldfield's announcement to cut around 1,500 jobs. Goldfield is the latest company to announce planned job cuts. Last week, Implats announced plans to retrench 13,000 workers. Companies are blaming the jobs bloodbath on the sector on unprofitable shafts, with Goldfield saying its South Deep mine is struggling. Meanwhile, Mantashe says the decision to cut jobs was made without due regard to the law. Goldfield shares were down about 6% following the announcement. The minister says mining companies should find ways to optimize production and not rush to cutting jobs. He urged Goldfields to engage with stakeholders. To unpack more on this story, I'm joined now on the line by Goldfield's Vice President for Corporate Affairs, Sven Lunch. Hi, Sven. Welcome to the show. Thanks for joining us.
Good evening, Harold. Pleasure.
Did I pronounce your name properly, by the way?
Lunche, yeah.
Lunche.
Nearly.
Better
than most. Better than most.
Got you. There's been quite a few announcements of job cuts in the mining industry, and platinum and several other places, and we do understand there's issues around platinum prices and so on. In your case, it's not so much conditions around the price of the commodity, but it's conditions relating to the operational circumstances that you're facing at South Deep.
Yeah, Harold, that's correct. Look, the rand, the gold price has not been doing much in dollar terms, but we've had a level of protection from the rand. So the rand gold price, although it has come down this year, is fairly stable. The option for us is we are losing money. We are losing significant money at South Deep, about R1 billion a year over the last 4 years. And the reason for that is that South Deep is a mine that is mechanized. So unlike many of the conventional gold mines, which are handheld operated, we have a mechanized mine. Unfortunately, in this country, this is a fairly new development. We're pioneering deep-level gold mining, and we haven't been able to manage the equipment. I think the workforce is struggling to adapt to a more mechanized mining mindset. Our management teams have struggled to adapt. So after 4 years of trying various things, we were left with, we believe, no option but to retrench about 30% of our workforce. And I think I need to stress this is a process. We've entered a Section 189 with the trade unions now. We're going to, over the next 2 to 3 months, try to find ways of minimizing the job losses. But the way we see it at the moment, we've tried virtually everything else. And unfortunately, we believe that about 1,500 employees and contractors could, at the end of the day, lose their jobs. But we're trying to avoid it. We're opening to dialogue both with the minister and the unions, and we want to see what comes out of that process.
Can you take us back a little bit in terms of the history of South Deep? If I remember correctly, you acquired it in 2008 for some 22 billion rands. Is that correct?
That's correct. We acquired it from a combination of JCI and Placidome, a Canadian company, for 22 billion rand. The reason being it is the world's second largest gold ore body. So we have in our resource about 70 million ounces, which is, I think, only a mine in Indonesia is more than that. So it is a unique ore body, a very wealthy ore body. But and since that time, we've invested about 10 billion rand in building the infrastructure, in modernizing the mine, in mechanizing the mine, in bringing in good skills. And so 32 billion rand, and our shareholders have not seen a cent of return. So they are rightfully getting very, very upset. We believe this mine has a future. It could be the future of gold mining in South Africa. It has 70 years of life left, but we need to make it profitable. We can't carry on losing, as I said, R1 billion a year. So we believe we can recoup this, but unfortunately we have to go through a couple of painful steps for the next 6 to 12 months.
How much patience do your shareholders have? I mean, from what I've seen recently, there seems to be quite a bit of angst amongst your shareholders about precisely what you just said, that it's been 10 years of burning something in the order of 10 billion rands, and now you're at about R1 billion a year's worth of cash burn. How much more patience do your shareholders have in this? Are they supporting you going forward?
Obviously, our share price has taken a big dive, not just in line with the general gold sector. We've seen a decline in the last 2 days. We've seen an even, I think, altogether about 15% if you take the last 2 days into account. They are losing patience, but they also know the value of the gold body. And I think, Harold, you mustn't forget, South Deep is just one of our 7 mines. Our other 6 mines around the world are doing really well. They're earning lots of good cash, which has been used partially to either to pay down our debt or to fund South Deep. So it's not just that Goldfield is only South Deep. We have some very, very successful mines in Ghana, Peru, Australia, which are making good cash for us. But I think we are being tested by South Deep. We believe that the steps we've announced over the last 2-3 days will be the right steps to see us through. But and our shareholders have kind of indicated to us, we're going to give you a few more chances, but eventually you're going to have to stem the outflow of cash. We believe this will reduce the outflow from about 100 million to about 30 million or so, and depending on how successful the restructuring is. But if we don't achieve this, I think their patience will run out very quickly.
And of course, this is the dilemma you have, right? I mean, I think South Deep, as you say, is 70 million odd ounces of gold, which is probably something in the region of 65% of your total reserves, right? So that's quite important. But on the other hand, your other operations, which are much smaller in terms of reserves, are doing pretty well, as you say, from a profitability and cash flow point of view.
They are, and enough so that we've managed to use the cash to fund 2 big projects. So we are rebuilding the Damang mine in Ghana, we're building the Gruyere project in a joint venture in Australia. And when these come on stream in 2 to 3 years' time, our production will carry on at the level of about 2 million ounces for the group. But clearly the long-term future beyond the next 10 years will rest on South Deep. At the moment, who knows what will happen then? We might build more mines, we might buy a few more mines. But for now, certainly analysts and shareholders see South Deep as the future of Goldfield. And unless we can bring those reserves into operation profitably over the next 2 to 3 years, we do have a problem in our hand. We realize that, though, and that's why we're undertaking these drastic steps now. These are not pleasant steps. Retrenching people in this industry, in our country at the moment, is a very, very difficult decision. And we understand the minister. We understand his frustration. We believe we followed the due process, and we did meet with him. We are willing to listen to his dialogue to avoid these losses. But we've tried many, many options. We've got experts in from around the world to help us with it. In Australia, they've been underground mining, mechanized mining for decades. So the culture is there. We are not there yet. We started maybe 6-7 years ago. It will take us a few more years to get that mechanized mining mindset into going at the mine.
But when we look at the issues operationally, so clearly your big issue is not so much that you can't get to the ore, it's extracting it, efficiently and profitably, which you're struggling to do, and therefore is leading to this, cash burn problem. So I think it's understandable. One of the things you need to look at is your cost, and labor is one of the costs that you obviously do look at. But what's not going to change in these operations is the operational difficulties you're facing in terms of the geotechnical circumstances and the other, physical conditions that you're having to deal with. Once you've gone through the process of cutting down on your labor costs, how quickly do you think you're going to get to solving the actual technical problem?
Over the next few months, labor is only one of the issues we're looking at. We're also reducing our fleet underground. South Deep is a mine that has 2 shafts. We call them the Twin Shaft and South Shaft. Both these mines are currently used to operate the mine from. We're going to effectively close South Shaft and only operate 1 shaft. That will provide a lot of savings. We're going to reduce the fleet that is sometimes congesting the underground structures. So we're going to reduce that, which will also bring in savings. Altogether, we expect significant savings. It's not just labor. There's a whole range of things. We invest a lot in training. We invest about more than double what the rest of the industry invests in. That's about 10% of our payroll in trying to upskill our staff. We've had limited success so far, but we believe certainly with the people we want to retain are the more high-skilled people, the ones that are more successful with operating machinery. And don't forget, 90% of South African gold mines still operate in the conventional way. That won't work with our mines. So we have to do extensive retraining, but we believe we're pretty much there. And together with the other measures we announced, we believe we can be more successful. We're also going to focus on the new mine, what we call the new mine, which has more developed, has better infrastructure. So we are very confident that once we emerge from this restructuring early next year, we're able to provide the market with a better outlook on where we're going to be. And we believe it's going to be a more positive outlook.
Let's talk for a second about the more general conditions in the mining industry. You mentioned that the other gold mines operate more conventionally, and that's understandable. But there's also the reality, as per the Minerals Council statement a couple of weeks ago or a month ago or thereabouts, that 80% of the gold mines in South Africa are unprofitable. Given that, and the fact that now the biggest ore body for gold is what you're currently struggling with now, what does that say for the future of gold mining in the country?
I don't like to use the term sunset industry, but it shouldn't be a sunset industry. Let's put it like that. But and unfortunately, the reality of cost increases, the reality of underground mining, we have some very good gold around, and there's this general that the best gold reserves are still in South Africa, the highest grade of gold reserves are still in South Africa, but there's 3 kilometers underground.
Yeah.
To get equipment down there requires huge electricity costs. It requires ventilation, and it requires big crews in the conventional mines. Labor costs in this country, and I hate to say it, and I know the general perception is that mine workers are poorly paid, but the increases of the past few years have been significant. They've been above inflation generally, and we haven't seen concomitant productivity increases. I'm not saying that's the only thing,
yeah.
But it is a big factor. In oil costs have gone up until recently. Electricity costs, other input costs have risen above. So the average mine cannot operate profitably at the current rand gold price. So unless we find ways of working more efficiently, of working more productively, I'm afraid the gold industry is facing a difficult time. And at the moment, we've seen a bit of rationalization. We've seen AngloGold, Sibanye, Harmony rationalizing the mines, putting process infrastructure together so they can operate more efficiently. But there's a limit to how long you can do this. 10 to 20 years is kind of the outlook that the Minerals Council and we see for the conventional gold industry. But we're always hoping that there's technology that can come into being, that we can create maybe more efficient mining practices across all mines, so that we can extend the life. Because the ore bodies are there, as you rightly say, Harold. The reserves are there, but we just have to get to them economically. And economically is a big question mark at the moment. And unfortunately, at the moment, we don't see any way out apart from mechanization, rationalizing labor to some extent, and merging neighboring gold mines. And unfortunately, all that involves is labor cutbacks. And it's a very unfortunate development in the industry.
And Sven, this brings me to the next question I want to raise with you. And it's something that I have raised previously with officials of the Department of Mineral Resources, also with labor and also with analysts. And that is, the 3 sectors that almost define South African mining in a sense, gold, platinum, and coal, face very similar problems. Okay, not exactly similar, because in the case of platinum, it's not a sunset industry in the sense that the ore body is running out or anything like that. It's more issues around the price and global issues, etc. In the case of coal, it's perhaps issues around technology and renewables and all that sort of stuff that's happening around the world that's maybe cutting down in demand. In your case, it's an old industry. The mines are very deep. 3 kilometers underground is a very long distance. But broadly, the 3 of them are almost facing pressures, some internal, some external, that to me, and you bear with me here because I've never worked in the mining industry, but to me it sounds like it's the sort of thing that requires a kind of compact between the players involved in the industry to deal with the issues in each of those industries. So labor, the departments as the regulator, the minerals councils, and obviously the individual mining companies, communities even, because in many cases communities are quite integral or affected in all of these activities. Why is it when a problem like yours, which is not new, it's in all your annual reports for however long, and trading statements, etc., etc., why is it when you get to the point where the problem is puts you under so much pressure that you now have to start cutting down on operational costs, which obviously includes labor costs, that you get an uproar every single time? And it's not unique to you or to the gold mining industry, but across the board. That surprises me. Why does that happen?
It's a difficult one, Harold. We, like you, I think we believe that a partnership is essential. The communities are more recent. They shouldn't have been more recent participants, but thank goodness they are now. They long have been the missing fourth leg in the mining on the mining table. I think we have tried before we had Midgate, we had a labor compact. I'm going to talk now from an industry perspective, and part of our frustration is we go to these talks and it's all first of all, halt retrenchments. So that's the first thing on the table. So any kind of rationalization is immediately stopped. So that's even before the talks begin. They say we will only enter these talks if you halt retrenchments. Fine, but then when it comes to the talks, it is what can you give, and we have a terrible legacy in this country. Make no bones about it. I understand the history of mining is fraught with injustice and benefiting from apartheid. I know that we have a lot to make up for. But the last 10 years, I think we have tried to be good corporate citizens. We haven't always succeeded. But when we come to these kind of partnership talks, there has to be give from all sides. From our sides, yes, maybe retrenchment freeze is one of the options. But what we haven't seen from the other partners, and let's talk about government first, is kind of regulatory certainty. We've been living for about 20 years now with, until certainly 2010, we had a fairly stable mining charter that was developed by all parties in which we could all live with. But since then, it's been just uncertainty. We don't know whether the BE shareholding is going to go up or down, whether we have to spend more on training, the employment equity ratios, how much our supplier have to pay. And it changes every 4 years. And no company, especially a mining company, where you have to invest with a 10 to 20-year horizon, can live with that uncertainty. So we wish the government, we could agree with the government on a mining chart and say, that's it now. We're happy for the next 10 years. Let's work with that. Investors are not coming. Foreign investors have fled this country, with a few exceptions. They're not coming here because what they want above all is a stable investment climate. And I don't think there can be too much debate about that. I think government sometimes denies it, but the reality is we've seen it. The foreign shareholding of our mine, in particular of Goldfield, has dropped dramatically, and it's dropped for the rest of the industry as well. From labor, we've never had any kind of commitment to productivity-based increases. It's always above inflation increases and no kind of commitment to say, all right, we will link, let's have a base pay increase, and then the rest is based on performance, which I think is essential in an industry that is marginal. So let the labor win with us when the price is well, when we're doing well, let them share in the benefits, but also accept that when we are under pressure, as we are now, there has to be some sharing of pain. My experience has been, it's been all, what can you give? And I understand that as well. We are the ones that employ the jobs, that get the shareholder funds, but I think we're now at a situation where there has to be a give and take on all fronts. And unfortunately, our experience over the last 6-7 years, that hasn't been the case. It's never too late. And we have a new minister who understands the industry, and we are certainly hopeful. And he protects workers. That's his background. But we hope that with his leadership, we can actually get around the table, but then it has to be meaningful on all fronts. At the moment, there's a strong feeling by industry. It's what can you give and nothing in return in terms of legal stability and in terms of labor productivity.
That was Sven Lunsche, Corporate Affairs VP for Goldfields, joining us on the line. And that's all we have for you tonight from me and the team at Prime Business. Good night.